Hey RT family, Ryan Reynolds here with Keller Williams Consultants Realty in your November 2023 real estate market update. So what's going on here in November of 2023? Well, we're going to talk about kind of the same things we normally talk about: inventory, interest rates, and of course what everybody wants to know about is how much is my house worth compared to what it was worth last year. So let's go ahead and get into that now. So now the first thing we're going to talk about is inventory. Now inventory is just how many homes are on the market, and it's a pretty simple number, but when we look at where we are this year compared to last year, we're actually up about 12.8%. Now that sounds like a lot of houses, but when you actually look at that number and you boil it down, what you have is that this year we're at 1.4 months of supply of inventory, whereas last year we were at 1.3 months. So it doesn't sound like quite a big difference. And when you put that really into perspective and knowing that a balanced inventory is about 4 to 6 months of inventory, the 1.4 months versus 1.3 months really just seems like a statistical anomaly. So not a lot of changes there in inventory, but there are more houses on the market this year than there were last year. So the next thing we're going to talk about is interest rates. And now with interest rates, this has kind of been the roller coaster ride. In fact, just in the last week, we hit almost a historic high, not historic high, but a high for the past 30 years. And then also it dropped almost more than it's ever dropped in a week. And so those numbers look like interest rates for mortgages on 30-year fixed being right about 8%. End of last week, they dropped down to like 7.4%. And then this week early here, it looks like they're back up to about 7.5%. But still about a half of a percentage point of drop on interest rates. Now what caused that? Well, that's typically driven by the 10-year Treasury note, which is driven by bond prices and also by the stock market and lots of other things. And so it's pretty complicated, but just suffice it to know that bad news in the economy generally means good news for interest rates coming down. We're starting to see that now, and some people are hoping and predicting that we may have tested the top of the market at 8% and we won't see it go above that. I don't know yet. I know that inflation's been pretty sticky, and but I do know that the real estate market is slowing down quite a bit, and that's having an effect on everything, which is exactly what the Federal Reserve wanted. I just hope that they don't overshoot it and land us in a bad spot. So that's what we have for interest rates. So now the last thing we're going to talk about are home sale prices. Where are they now compared to where they were a year ago? Well, if you've been paying attention to the national media and to headlines, you probably think that your house is worth less now than it was worth a year ago, but that in Central Ohio is just not the case. In fact, the number is up 4.3% compared to what it was last year at this time, and that is just for single family homes. Largely that has been driven by demand. We've got a lot more demand still than we have inventory. As I mentioned before, we only have about a 1.4 months of inventory, which translates to a pretty strong seller's market. So there you have it. Those are the quick stats for this month and your monthly update. Hopefully you have a great month. Thanksgiving's coming up, my favorite holiday, because I get to eat as much as I want and then sit around and watch football the rest of the day, and it's actually what everybody else does. So have a great month, and we'll see you in December. As always, it's the Ryan Reynolds team, unlimited opportunities and exceptional experiences.